This is Stock Talk, a discussion of stocks in the news with the analysts of Zacks.com. Kraft Foods, one of the world's largest food makers, recently reported that their third quarter net income more than doubled after letting go of their Post cereal business and as a result of product price increases and cost cuts. Company's well into a 3-year turnaround plan, but this is also their first earnings report since Kraft replaced AIG in the Dow Jones Industrial Average. Here to pick this whole scenario apart for us, or with me I should say, is Tracy Reinick, value stock analyst for Zacks.com, and Michael Vodicka. Mike is the momentum stock analyst over at Zacks.com. Kraft Foods, KFT, is the ticker symbol. Now, even though they had a restructuring charge that they took in the third quarter, they let go of the Post cereal business, and some other issues that were kind of negative. They were still in line with the street, though, as far as what they did earn.
They were. It wasn't a bad quarter at all for them. Part of the issue with them, though, is that they're seeing increases from price increases because the price of the commodities and their products has gone up. They have had pricing power, and they've raised prices on a lot of their products, especially like the dairy products, like their cheeses. But in this kind of economy with things slowing down, there's concern that they won't be able to hold on to those pricing increases. Also in the quarter, they actually saw volumes decline, which is not a good sign for going forward.
Well, first of all, when you put money back into the bottom line just with cost cutting and price increases, those are not really true profits.
Right.
And so it's always questionable how long they can be sustained.
Right, exactly.
Second of all, they do have an issue in their cheese business.
Yes.
Apparently.
Yes.
There is, it's vulnerable to the current economic slowdown.
It is because the prices of cheese have really skyrocketed, and people are loyal to the Kraft singles, and that brand is strong, but when you go into the grocery store and you could trade down to some other form, that's what they're starting to see more now.
Yeah, private label cheese everybody's going for.
Right.
That just amazed me when I heard that.
Right. They're trying to focus on some of their lower cost products, and they're seeing some good returns on that, like the Kraft macaroni and cheese brand that's been around since 1937, and that was one of the reasons it became popular in the 1930s was, the product is the same. You add has the processed cheese packet in there, and you add a little bit of milk and a little bit of butter, which were affordable in the 30s and are still somewhat affordable today. So they're seeing an uptick in that because people don't want to eat out as much, and they're going to stay home and cook for their families. And also in their Oscar Mayer division, they're seeing kind of the same kind of thing. You might not buy the sandwich out at lunch for work, so you're going to bring your lunch, so you're going to buy at Oscar Mayer deli meats. So they're trying to emphasize that aspect of their business.
Yeah, I would have thought that the name Kraft and the word cheese had become so synonymous in the public's mind that that part of their business wouldn't be affected much at all.
Right.
Still in all, they upped their sales growth target for the next, the next quarter?
Yeah, fourth quarter.
Fourth quarter to 7% from 6%.
Right.
And they kept their earnings target.
Right.
For 09 at $2 a share.
Right.
So now, what did they actually end up earning for the third quarter?
Well, it was 44 cents once you stripped out the Post.
The 57 cents.
Yeah, they had 57 for the Post cereals, which they sold,
right.
And so they ended up at 44 cents, which was in line with estimates.
It was in line, yeah. And sales did rise 19%.
Right. In
the third quarter to $10.5 billion.
Right. If you take out some of the price increases, though, I think it reduces it to about 11%, which is still good, but you can see where the price increasing is almost 40% of their total sales was from the price increases.
Right. So even with all of those good numbers, the chart still doesn't look all that great, does it?
It doesn't look great. It's not terrible, though. Kraft has traded in line with the market over the last year and a half or so, and the share price topped off at $37 in June of 2007, and since then it's been kind of a steady decline lower, and then recently we saw a kind of a steeper drop down to the $26 level here. And really, you guys have touched upon the major issues. They're dealing with their commodity costs here. We've seen the cost of grain, wheat, skyrocket over the last year as interest rates have come down. There's been dollar weakness that's put a lot of pressure on these commodity prices. So they're trying to navigate these waters here. They're doing a pretty good job. Their earnings are holding up pretty well. The current year estimate is down a little bit. The next year estimate is, like you guys said, it's $2 per share. They're projecting roughly 5 to 6% earnings growth. So they're doing a decent job of hanging tough, but they have some challenges ahead of them.
Plus, they're pushing more product overseas into China, Russia, and Brazil.
Right.
Which I find, China I can understand. Russia and Brazil kind of surprises me that they would actually open up those markets more for themselves.
These markets have been prosperous for lots of companies, so we're seeing a lot of the growth come from these areas. So it's a good place to look for growth, really, these emerging markets, the BRIC countries as they call them, Brazil, Russia, India, China.
Interesting. What do you think they're going to do as a replacement to AIG in the Dow? Are they an accurate representation of the economy?
It's a little more diverse than having, just the big financial in there. So, yeah, I think, they have iconic brands. They're an large international company. So in that way, yeah, I don't think it's a bad addition to make the Dow a little bit more diverse than that.
Even given the issues with their competition in the cheese business.
Yeah.
Who knew cheese could be so competitive?
So controversial in an economic slowdown period.
Right.
And from a momentum standpoint, where do you think that's headed? Continue down, or is it going to level off here at one point?
Well, it's really hard to say here. A lot of this depends upon the reaction of the consumer, like Tracy said. How long can they continue to raise their prices? What's going to happen with commodity costs? I'd say there's a lot of uncertainty floating around with a company like Kraft now, so it's really time to be patient and kind of wait to see how everything plays out.
All right.
And while you're waiting, you can get a decent dividend. They pay a 4.3% dividend right now.
That's interesting, too, especially during an economic time.
Right.
And at a time where they would cite economic slowdown as, again, a major issue in one of their businesses.
Right.
That they would continue to keep that dividend going forward. No sign of them cutting that, right?
No, not yet.
All right. Do either of you own this company?
No.
All right. There you have a little taste, as it were, of a major food maker, Kraft Foods. KFT, the ticker symbol. With Tracy and Mike, I'm Terry Ruffalo.